Good evening, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's December 12th. Hey, I want to greatly apologize for the late report today, but still want to get it out for you guys. Today's basically after close of market. Usually I try to get these out in the morning, but unfortunately today circumstances didn't allow me to. But I wanted to still get these reports out to you. So today's news will be basically after the market had closed. So let's kind of jump into it. We'll start off with the economic calendar. What affected the data today is the NFIB Small Business Index for the month of November. So October produced a good number here at 103.8, and the month of November came in at 107.5. This is actually the second highest number we've ever seen since its recording of this. And my understanding it's actually over 100 years. This has come in very well. This is basically attributed to the tax reform, thinking that this will help small businesses as well with their growth and be able to hire more people with the tax reform. Last but not least, we got the producer price index level for the month of November. What this is, it's kind of a gauge for inflation for the wholesale side of things. Now, we don't always give a lot of weight to this, primarily because even though inflation may go up, the costs may go up for on the wholesale side. It doesn't always get passed on to the consumer, and that's our main concern. What we look at, a reason why we look at more the CPI and the PCE gauges or indexes. So that's what the Fed kind of looks at. But we do kind of look at these. As you can see here, back in October, we had a 0.4% growth increase in their costs, and the forecast for November went up 0.4, and they came right at expectations. So we're seeing some pretty healthy increases in the costs for the wholesale side of things. So yes, at some point it's possible it could get this could get passed on to consumers when we're seeing, they can only handle so much cost increases and lose more of their margins. But this brings us year over year to about 3.1% on the wholesale side of things. So let's go ahead and take a look here at the headline news. Stock market ended up mixed. We had the Dow and S&P 500 both closing in at record highs. Nasdaq pulled back. Nasdaq did pull back a little bit. Today's headlines basically came in the start of the FOMC. They have their two-day meeting starting today and then tomorrow, approximately by 11 o'clock Pacific Standard Time. Ms. Yellen, perhaps for a final time, will be giving her announcement of the FOMC meeting. And it's expected, it's pretty much built in that they're expecting a rate hike of a quarter point tomorrow on that. So the stock market kind of shrugged it off, believing that's coming in. They think the economy is doing well, and they think the economy can withstand this. Now, one of the things, of course, is pushing the economy is this new tax reform. It seems like we're getting a lot more progress in terms of the Senate and the House getting together and making this develop here. So we may have this by year end implemented. And again, this is why we saw a nice small business index, why that was so high, the confidence level for small businesses, why the stock market's been taken off. They all want this new tax reform. So with that in mind, again, this is what's kind of driving the markets today. And I think that things will get more. But what they are kind of looking at is, low inflation. They are kind of looking at maybe a possible recession down the line. Why is that? Because if you keep looking at these rate hikes, we'll touch on it after this. We'll kind of look at, but if you see these rate hikes, the margin between short-term and long-term is getting smaller and smaller, and at some point we're going to have what they call a flat yield curve, which basically means that the short-term and long-term rates are at the same, and then at some point the short-term will go above that. Now, when they go back above that, that's what they call a inverted yield curve, and that basically leads us into a recession, primarily because lenders are not willing to lend at that point because they're losing money anytime they lend outwards, as their costs are higher than that of the than what they lend out at. So this is what creates a little bit of issues, what leads us into recessions here. So let's kind of take a look here at the bond market here. And yesterday we had what they call a bond rollover. That was about 9 basis points. So we would actually be up closer here in this level here. So, but today we did close down about 8 basis points. We did test the first level of floor support. Now, tomorrow we could get a little bit of improvement due to the rate hike. Typically what happens is anytime we do a rate hike, this is basically helps curb against inflation, and by keeping inflation in check, long-term rates like that, primarily because it kind of erodes the value over their value over the long term. Now, on this case, bonds, it goes over a 30-year period, and any little increments that kind of erode the value, kind of over that long term, it can inadvertently affect it very negatively. So they like it when rates go up because it keeps inflation in check. So let's take a look here at the 10-year Treasury. We're up about 2 basis points today. So we did close up about 2.4 for the day, a little bit further away from our goal of trying to get below this 200-day moving average. But again, we'll kind of wait and see tomorrow, see what brings in. But again, rates are, again, as we saw earlier, the rates are did go up a little bit today from what we saw yesterday. We did close down, I think, 9 basis points yesterday. So we did see pricing for the worst. But again, tomorrow that could all change, and especially after the announcement of the Fed, and later in the afternoon, we could see, the market taking off because they're going to be looking for new changes in the policy statement. See if they address anything about jobs, if they address anything about inflation, if they're going to address anything about the economy going forward. See what they say. So that pretty much wraps things up. I hope you guys have a wonderful day. But if you can always come over to Twitter, find out Mike Bjork, and get data throughout the day, anytime. I did post earlier in the day. Just unfortunately today, actually creating the video is what was taking a bit of time, and I wasn't able to get around to it till now. You guys have a great evening, and I look forward to see you guys tomorrow. I'll try to get tomorrow's video out a little bit sooner. So hopefully we can get that out this week. It's just a little bit kind of crazy, and I'm going to try to get these out sooner, but just to kind of give you a heads up, it may be kind of later in the day. All right, take care, and look forward to see you guys tomorrow. Bye.